Good morning. Welcome to Stock Market Today. It's Friday, January 15th, 2021. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities were mostly lower on Thursday, as initial claims data was a negative surprise ahead of President-elect Biden's relief plan. Energy and REITs outperform while tech and communication services lag the broader tape. Treasuries were weaker with the curve steepening following Fed Chair Powell's appearance earlier in the day. The dollar was weaker against the yen while little changed against the euro. Gold was down 20 basis points. WTI crude finished up 1.3%. And as we get to the desk this morning, S&P futures are down 40 basis points ahead of the long weekend here in the U.S. Remember, markets in the U.S. are closed on Monday in observance of Martin Luther King Day. Asian markets were mixed overnight, with Japan and Taiwan lagging while Hong Kong was higher. European markets are mostly weaker this morning. Treasuries are stronger across the curve. Dollar is stronger against the euro, but lagging the yen cross. Gold is little changed. WTI crude is down 1.4% to kick us off on the final trading day of the week. And it's been a choppy week, a grinding week. Thus far, I guess you could call it a week of under pressure a little bit. I think it's just kind of near-term choppiness within the context of an uptrend. As I said, claims data weighed on equities on the day. Support for the S&P, the song remains the same, 360, then 340 below that. If we're above 340, we're playing for 413. Qs, 260 is key support. 300 is important in the near term. IWM, same story. 190 near term, 160, 170 range, important for the bigger picture uptrend. IWM actually another new high yesterday. Small caps just continuing to grind higher. I think small cap strength largely attributed to the anticipation of the COVID relief plan that was outlined by President-elect Biden. Some hints of it coming out throughout the day, and then obviously the presentation last night. But very much the song remains the same. Broadening participation within the market, uptrends across the board for the major averages, not shown here, but we've talked about it in our notes. The equity rally is broad in the U.S. It's broad globally. ACWI ex-US, if you take a look, ACWX, the ticker symbol there, trading at new highs. So broad-based strength in the equity market. Drill down on individual names, you're seeing it. A lot of stocks in uptrends, and it's not just isolated to one theme or one group. It is broad-based, and that remains the case. So it's hard to shoot against that. The trend is up until proven otherwise. Let's talk about our market in a minute. What are we writing in the note today? Well, stocks falter after weekly claims disappoint. The claims data, there's no two ways about it. It was terrible yesterday, but market kind of churning on that news. Key measures of risk appetite are near-term overbought. My notes on Fridays, we look at different relationships and themes. A lot of the themes that we've been talking about that have kind of bolstered our bullish view remain in place. They're just overbought here in the near term. Semiconductors extend their leadership position. I would argue that they are extended here in the near term on a relative basis. Growth value rotation is on the verge of a breakdown. Could be. Futures, as I said, point to a lower open here today. Now, if we look at the major indices from a power bar perspective, the Dow lost 19 bips yesterday, 7-2 bulls to bears there. S&P 500 down 32 basis points, 129.54, still solidly bullish. NASDAQ down 53 basis points, 24-14 bulls to bears. Small caps buck the trend once again. 2% to the good, 851 to 109 bulls to bears. Bonds down tick. Energy, your leading group once again. 4 bulls, 0 bears within the energy sector. XLE, the ticker symbol on the ETF there, as that fund added nearly 3% yesterday. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's hit our stock of the day today. Kind of thinking thematically, obviously cloud computing, software in general, still a major theme as far as I'm concerned. So we look for opportunities when they present themselves. Cloudera, CLDR, is a name that I'm highlighting today. Bullish rating, closed at 1445, up 3.21% yesterday. Strong trend above the rising long-term trend line. Software is a strong industry group. Stock is a recent outperformer, so a recent personality change as we went from laggard to leader. Bullish fund outperforming, oversold, overbought, oversold indicator rounding higher in an oversold position with bullish money flow. Triggered a money flow buy alert today in our system here at Chaikin Analytics. I think you can basically see here the stock is consolidating above near-term support at the $13 level, which sets up a compelling opportunity as far as I'm concerned. If you're looking for it, if you have room to add a software name, if it fits into your portfolio, if it fits into your style, if it fits into your risk tolerance, you may want to look at a name like Cloudera, CLDR, as a potential bullish opportunity here in the near term. Let's look at the sector tracker now. Movement of the major sectors over the last 5 days of trading. There's your energy at the top of the list, right? For how long did you hear me hate energy? Well, it's not the case anymore. The data changes, the facts change, you change your mind. Energy now a market leader. Financials, real estate, discretionary round out the top four. Utes and industrials also higher over the past 5 days of trading. Healthcare, materials, tech, middle of the road. Staples, comms, lagging. A lot of fits and starts, puts and takes. I think the big picture trends that we've been talking about for the past few months largely remain in place. Now, speaking of energy, our industry in focus today is E&P, oil and gas exploration and production. XOP, the ticker symbol that we're going to use to track that group, has outperformed the S&P over the past 6 months by nearly 23%. Power bar ratio, which looks at future potential, very strong. 6 bulls, 0 bears. Currently ranked number 7 of 21 subsectors, having moved up 6 slots over the past week. Some of the names there that might present opportunity, I can't believe, ExxonMobil, Renewable Energy, REGI, and World Fuel, INT, all with bullish ratings in our 20-factor model at Chaikin Analytics, and all holdings of a fund that has undergone the personality change that we talk about. Bullish, outperforming, bullish money flow, right? 6-0, trend is strong, above the rising long-term trend line. On the verge of taking out that June high. We like to see that be the next step in the progression. One thing we can say is that we are overbought here in the near term, as many of the leading themes within the market are currently overbought conditions, or something that we're seeing it, right? IWM is overbought. If you look at it, a lot of the key leadership areas of the market are currently overbought. So the way I like to think about that is overbought, oversold helps me figure out where we are within the context of the trend. What's the trend? Well, the trend is strong, right? Above the rising long-term trend line. That's an uptrend, right? Well, where are we within that uptrend? Well, we're overbought now. So do you want to be aggressive when you're overbought? Probably not. Probably makes more sense to be aggressive when you are oversold within the context of that uptrend, right? I use it to calibrate how aggressive that I want to be, or how aggressive I think investors should be, depending on their process. When you're overbought within an uptrend, it's a great opportunity to do some reading, do some research, maybe identify potential new ideas should markets, for when markets cycle back down to oversold conditions. Maybe you have some names that have gotten extended and you want to ring the register a little bit. That's perfectly viable as well. There's no one way to do it. The way I kind of frame it up in my head is I would like oversold within an uptrend to be aggressive on the long side of the portfolio. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. HollyFrontier, part of that energy complex, up nearly 11%. Oxy, some commentary and data on shale permits sent that stock higher, 8.5% after a sharp spike the previous day as well. AMAT, Applied Materials, the entire semi-cap equipment space, solid yesterday on the heels of the earnings announcement from Taiwan Semi. And in particular, what kind of got the semi-cap equipment names going was their CapEx guidance coming out of Taiwan, right? Their kind of initial assessment of how much they're going to spend this year. MRO caught 2 upgrades, stock higher by 7.8%. Norwegian Cruise Lines, didn't see anything company specific there to take the stock higher by 7.3% on the day. Loser side of the board, MSCI, no news, down 6.6%. ROL, didn't see anything there to take 6% out of that stock. VTRS down nearly 6% on the heels of their presentation at the JP Morgan Healthcare Conference. MA MasterCard, very bearish stock, down 5.6%. I didn't see any news drivers there. BLK earnings announcement takes 4.65% out of that stock on the day. So a lot of moving parts. We're starting to get to earnings season. JP Morgan on the tape this morning. Well, we're going to hear from Citi. We're going to hear from Wells Fargo. We're going to start to kick it off, right? So the macro focus is going to start to shift to the micro as we get earnings announcements. I also would point out it's also conference season as well. A lot of investor conferences going on, a lot of opportunities to hear what management teams have to say over the next few weeks. So I apologize here. I messed this part up. I did not change my header. I apologize. This is growth versus value. So you get a little real-time look at what's going on here. I apologize for that. Growth versus value on the precipice of a breakdown. We're kind of dancing with the 200-day moving average. Near-term support coming into play. It's a theme that's been playing out for a while. Everybody's been talking about it, but the breakdown could be interesting. Now, momentum kind of middle of the range, potentially shifting towards bearish ranges. If you're a bull, you want to see support hold, quick rebound without becoming oversold. So far, that has been the playbook. We have not been oversold in terms of RSI. However, the breakdown would be important to be mindful of. So we'll continue to watch this. But remember, it's really the mega cap growth theme that's driving a lot of this. It's not, just broadly, let's sell growth. You can't do that, I don't think. I think you really need to drill down the way we have been drilling down. It's the mega caps. Look at the charts of, Microsoft, Apple, Adobe, Facebook, Amazon, right? Those monster cap stocks have gone nowhere since late August, early September. And I think that's a big part of what's going on here. It's a big part of the reason that at the bottom of the chart, the Qs are basically sideways since early September relative to the S&P 500. So it does make sense to drill down. It's not a tech only phenomena, all right, because equal weight tech is fine. Small cap tech is doing well. It's a mega cap growth acting as a source of funds, with those funds seemingly being distributed across the market. And that's why we're seeing that broadening out of leadership. Now, another kind of way to look at the cyclical trade, the cyclical rotation, is to take a look at the copper miner, COPX, ticker symbol here. Nice steady uptrend above the 50-day moving average, above the 200-day moving average. RSI solidly in bullish ranges. Look at the scooter for COPX at the bottom of the screen there, 98.3 rating. So solid outperformance relative to the market, and all confirmed by the Chaikin Power Gauge ETF rating, which is currently very bullish for the ETF COPX. So a lot of different ways to connect the dots, look at the data points, but I think the theme remains the same: broadening out, more cyclical participation. A lot of the same stuff we've been talking about. You're seeing it confirmed in multiple ways across data points. So I think that's really interesting when you're kind of coming to the markets here and paying attention to what's happening under the surface. And again, hard to be bearish on the market when the semiconductors look like this on a relative basis. SMH relative to SPY, just monster outperformance. Monster outperformance. The only thing I can say here is that it's somewhat extended in the near term. It's about 22% above the 200-day moving average. Now, confirmed by momentum, look at the RSI of the ratio, has not become oversold in 2 years. Solidly in bullish ranges, is actually overbought in the near term. So maybe a little overdone near term. But when we're thinking about what this means for markets, we know that when semis are outperforming, that's generally bullish, especially when that outperformance is accelerating to the upside the way it is now. That's something that keeps us on the bullish side of the argument, and will continue to do so. So that is going to wrap us up on a Friday morning. Take us for a test drive, chaikinanalytics.com/test drive. Special thank you to all of you for carving time out of your morning to spend it with me and listen to what I have to say. I hope you have a great long weekend. We will be back here on Tuesday.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.